Good morning and or good evening, friends right around the world. This is going to be a little bit of a pre-market update as we move into Tuesday's day's worth of trading. It is a relatively interesting market that we're sort of looking at, trying to configure and break down. It is relatively interesting, and it is also important that I share with you my honest assessment of what we should be looking out for given this type of period. Now, in the world of technical trading, we're faced with different types of situations, different types of market environments, and it's very important that if you're trying to understand markets technically, when the best time is to act or to be active in the market, and when it's best sometimes to sit out and wait for a better opportunity. The reason for this recording right now is because of the two scenarios which I've just described to you. Really, we find ourselves at the later, the second. We're sort of faced in the type of environment where it's best not to overplay your hand. The reason for that is because this market can really quite easily go one of two directions. At the moment, we're finding ourselves in a market which is relatively stagnant. I mean, the Dow Jones Industrial Average, it has broken out at the beginning of June, but really since mid-June, we have more or less moved sideways, slightly negative, in fact. What we are essentially doing right now is we're really trying to establish whether or not this recent breakout on the Dow Jones Industrial Average, which has been sort of the lagging market of the three, is actually legitimate, and if it is also sustainable and going to sort of continue indefinitely further into the year 2017. I can break this down very quickly, and I spoke about this over the weekend, is that, look, we are still trending technically. I mean, on the intermediate time frame and also on the macro time frame, there's nothing to be concerned about. However, on the molecular level, the minor level, which is what we use in the world of technical swing trading, we're starting to get a few sort of conflicting signals that does suggest there is the likelihood and also the potential that we are going to see a pullback in this market. So, I mean, if I'm asking you the question right now, how do we best approach this market, given the understanding that, look, we can continue above these recent or most recent swing highs, but at the same time, we can still pull back a little bit further. And again, that does fit the profile of what these oscillators suggest, having moved into some form of a reset. So most importantly, shown here on the MACD, you can see that we are still in a negative sort of, in a bearish cross, so to speak, but the momentum just isn't really pushing to the downside, hence the sort of stagnant sideways type of market. So really what you want to be doing right now is thinking about, well, where will you act or where will you react to certain price action, which is inevitably going to show up. Now, it's either one of two scenarios. Either we are going to definitively break above the swing highs, above 21,566. If that occurs, then obviously in our top 12 list over here, a lot of those individual stocks are going to trigger bullish. The problem is, however, is that if you are to start entering into market orders, or at least if you're just doing market orders right now and you're sort of preempting the move which hasn't occurred yet, it is relatively dangerous. The reason for that is because there is always the possibility that we come back down and retest some of these support levels. So again, this is how I'm approaching the market, and I will share with you in this little pre-market update what I'm doing. And essentially right now at the moment, I'm doing nothing. And that's okay in the world of technical trading. And as a technical analyst, as a full-time trader, sometimes it's best not to have capital allocated to the market. I mean, sure, you can hold on to long-term positions, which is what we've got from various lower levels if you have those long-term open call exposure, say for instance on the actual market indices themselves. But if you're looking for a position which makes a lot of sense to enter into the market or to become, or at least looking out for potential triggers or signals that are going to help you, it is most certainly down at this green box over here on the Dow, which is coming in at around 21,100, even as low as roughly 21,000 on the nose, or you're just going to have to wait for the breakout to really confirm the longer term type of directional movement, which is what we're sort of forecasting at this particular point in time. It's always good to remain humble and to sometimes say to yourself, well, I'm not entirely sure which direction this market is going to move. Sometimes in the world of analysis, the evidence or the weight of the evidence is just overwhelming one direction or the other. But again, during certain market conditions, such as the market conditions we find ourselves in at the moment, it's best to relatively be, so to speak, inactive and wait for the right opportunity to start allocating capital, especially when it comes to individual trades. Now, a lot of the individual trades are all over the place. And again, that really is just a reflection of what is occurring in the market. You can see that we've got quite a range of candlesticks. I mean, some are bullish, some are bearish. The majority of these candlesticks up and around this location are relatively bearish. We've got a couple of prominent upper wicks establishing themselves right around this swing high over here. We've got a couple of engulfing candlesticks too. We've got doji candlesticks. We've got hangman at resistance, so to speak. We've got a couple of 3-day reversal patterns. But again, at the current juncture, we're simply not seeing any pullback. On top of that, you can still make the argument that we're trending. We're still holding above the most important exponential moving averages. We're still quite a distance away from that rising 50 as well. So you can start to say, or at least come to the conclusion, the very simple conclusion, that the market itself needs time to rest. Now, the good news about this is that, look, the Bollinger Bands are starting to squeeze on the Dow Jones Industrial Average. That's telling us that, again, we're in a relatively low volatile type of market condition. Again, that's sort of symbolized, or at least expressed, through this sideways choppy action. And when I start combining this with that ADX and also the CCI, you can see that we are technically trending as per the CCI. The ADX is reset, which is fantastic. So this is what we want to see prior to a major market move. The problem is, however, is that we just simply don't know which direction it's going to be. So we can come to the conclusion that we can place some triggers above certain areas, or we can wait for lower areas or lower price levels until we start allocating capital. But until we get one of these two directional moves, again, are both relatively bullish and constructive outlooks, we aren't really floating the idea of any major material bearish pullbacks at this particular point in time. However, we might have to shift our analysis, or at least adjust it in due course. But again, we're getting a little bit of ahead of ourselves, so to speak, if we are sort of anticipating a larger market move to the downside at this particular point. The same is true for the S&P 500. You can see we are relatively flat. We're moving sideways. It looks as though we could have broken above this macro resistance area, and we could be coming back to retest it. Of course, that is a possibility as well. But you can see the general setup. We're looking for the market to actually continue above the swing highs to really confirm the intermediate and the macro level of the trend, the continuation of the market to the upside. If not, it is going to be a buying opportunity where X marks the spot. We've got multiple areas of confluence which are underlying this market in terms of support, which is going to be bought in the future if in fact we see the market pull back or even retrace a little bit further. The Nasdaq is quite interesting as well. I mean, if I go to the weekly chart, it's only been one session and it really only accounts for Monday's session, but we closed up 23 points as well. So I mean, you can sort of see how we're trying to gain traction. All of these markets, more or less, they haven't pulled back down into my predefined area of support. You can see these green rectangular boxes. This is my actionary area. So if in fact we do pull down to this level, I'll be looking at this market a lot more sort of aggressively in terms of immediate trade opportunities, or at least sort of allocating capital into market exposure for the upside. But right now, essentially, we're in no man's land, and we can continue the whipsaw. We can continue sort of the choppy sort of trading activity. And again, you really need to be, I mean, the class I just spoke about in the weekend, I use the expression or the term delicate. And really right now, if there is any word we could give to this market, you know, from I guess my own personal word, it would be that we are sort of rather delicate, or the market itself is rather delicately poised for a number of reasons, which I've sort of recapped and touched on during this little pre-market update for Tuesday. But again, it's just very important that, I mean, if you find yourself learning how to understand markets, or at least how to evaluate markets through the chart or through a screen, right? Looking at price action displayed through the chart and through the graph, it's important that you understand, or at least that you don't overthink certain situations. Sometimes if you find yourselves overthinking certain situations, which, I mean, I can see a lot of people doing that at this particular time, you really need to sort of pull back and say to yourself, look, the market's a little bit bifurcated. It is relatively mixed. The market and market participants are relatively confused, or at least they're not coming to a certain agreement on price, which is allowing prices to trend. And because of that, you just need to let the market be. And it really is that simple in the world of technical analysis. Sometimes it's, you know, we have these really fantastic types of trading environments where, say, for instance, we're in a bullish trend, and we can just hold these long, or at least these long positions, and over time they will obviously make money. But at this particular point, it is relatively sort of mixed. And again, just to show you this, I mean, I've been speaking a lot about market confirmation. And again, the relationship, the general relationship between the industrial average and that of the transportational average. What we've seen on Monday, again, is to see the transportational average pull down. It's pulled back 21 points. It isn't the biggest of moves, obviously, but again, you can just see the sentiment of this particular candlestick. This left us with a doji candle on Monday to begin the week's worth of trading. If we go back to Wednesday last week, we saw another doji candlestick, and we still have a series of upper wicks. So although it looks as though the transportational average is looking to break out and trend, it essentially hasn't really given us that definitive confirmation yet. If we see a major advance to the upside on the transportational average. That's really going to help us in our overall assessment of the industrial average. But at this particular point in time, I wouldn't really stretch the analysis really all that much or all that much further to suggest that this is a definitive breakout in the transportational average yet. I mean, the CCI supports it, so does the ADX. But for me, my real confirmation or trigger now that the transportational average is above this macro resistance area is to actually see the industrial average eventually push on up above 21,566 to get a couple of consecutive closes and to see price action continue above that level. I think that's all really I wanted to say. I mean, I hope that's helped you. If you found yourself a little bit confused looking at this market or sort of scratching your head as to why individual stocks are acting the way they are, just understand that they are sort of a byproduct of the actual indice which they are housed in. And if the indice itself is a little bit unsettled, most or at least the majority of individual stocks are going to act in an unsettled manner as well. And as long as you can draw those conclusions from this analysis video, it should make a lot more sense as to what is going on with the technical markets in the US at this particular point in time. So I wish you all, anyway, a nice Tuesday. Whether or not you are actively trading on Tuesday, I wish you all a good Tuesday. And I'll keep a very close eye on this, maybe recap Tuesday's price action if we see some relatively interesting candlestick which is adding to some of the forces at play up and around these historical highs. So on that note, everybody, enjoy your day, enjoy the rest of your week. It's James signing off on behalf of Pivot Point Trading. All the best. Goodbye.